Well, let me tell you what, stock nerds and market lovers. Listen. I have a big show. Danny, I can tell you I have a big show because I've got a lot of notes. And so that's how you know it's a big show, because I've got a lot of notes. But let me not bury the lead here. Zach.
Yes.
Watch this. You ready? Look at me. Last show.
Last show?
Last show for me.
Last show for you?
Last show for me. I'm leaving Revere.
Oh.
See, I wanted to see what your reaction was. What show number is this?
Why, 410.
410 shows.
410.
Good number to leave on.
And this is it.
This is it.
You're all right.
As the door said, this is the end.
Yeah, my friend, the end. Yeah.
Yeah, this is the end. My friend, the end.
All right.
Was that a song about someone leaving a job or death?
I don't know.
I really don't know. We should probably figure that out before we put that on the show
Last
title.
show.
Yeah,
All
no, I'm
right.
not dying. I'm just leaving.
Well, we're going to have to do it
Much
it's
different.
Going to have to be a blowout.
Right?
Well,
Well, I've got a lot of notes.
That's right.
As
You
mentioned
sure
before,
do.
I've got a lot of things. But before we talk about departures, right?
Yeah.
We need to talk about, I've got a few things that run off the list here, okay?
Okay.
We could talk about how I saw a movie.
Want to see Top Gun?
No, I saw the Minions movie, loved it.
Oh, wow.
Yeah, I saw the Minions. Yeah.
talk
Well,
about that.
much better than Top Gun.
Oh, really?
Yeah, instead of Tom Cruise, you've got a combination of French, Spanish, Japanese, and English-speaking yellow people.
Right.
No, that was the Beaker from the Muppets. I don't know what that. Anyway, the Minions movie was awesome, and they sing "Can't Always Get What You Want" by the Rolling Stones.
Oh,
that's
one of
sweet.
my favorite songs.
Right, it's a great version of it. You can download that on. It's on the Amazon Music. You can listen to it.
Drive yourself insane.
More
from
importantly, last week, let me roll back the clock. Last week, Zach did some of his. This story will not end up at Morgan Stanley. I swear to God, but it will end up at Coffee Safety. Last week, Zach did some of his greatest producing ever. I went back. I was listening to the show. Sometimes I'll go back and I'll listen just to see, what did I hear? What I thought I said. I want to hear it.
Yeah,
right?
sure.
And so I go back and I pick it up. Zach's descriptions. If you're not watching on YouTube, the descriptions and the timelines Zach has in there are Easter eggs, and they're
little tripwires. Get people to engage with the show.
they're funny. Like, they're funny as all get out. And so I talked 12 minutes about potato chips last week, right?
Uh-huh.
And so, but let me explain before people get mad again. I'm not going to talk about potato chips, but watch me talk about potato chips, right? And so, last week's show, I believe, was the most downloaded show of the summer. Okay. The whole premise of the show is, I don't believe in incrementalism. Like, if you just do things that are a little incrementally better, you're not going to do something that's so great that attracts people to make them want to engage with you, buy your product, enjoy your service. Here on on 5 days a week, you get red meat and videos, right?
Yep.
Here, you get to expand upon thoughts, what's happening in the economy, what's happening in the market, but you also get to know us a little bit.
Have a little fun, yeah.
And look, I know a lot of miserable people. I used to meet them on the road when I worked for IBD. A lot of miserable people in the stock market, and I know what I know what attracts an audience and what keeps an audience. And so I went back because I said to Tanya, she goes, "How'd the show go?" And Tanya's my wife. I went home. I said, "Hey, talk." She goes, "How'd the show go?" I'm like, "I think I talked 12 minutes about potato chips." Like that. And she said, "Huh?" I said, "Yeah, I started talking about how we live in the potato chip basket of America up in Pennsylvania." And so she goes, "How did that go over?" I'm like, "I don't know, but we ended up at Charles Chips. It can't be that bad." Charles Chips. And so anyway, couldn't have done the show. By the way, Zach, getting back to Zach's greatest piece of producing ever.
I can't wait to hear what.
Well, I texted it to you.
Oh,
Yeah.
Okay,
so
yeah.
I text Zach. I'm watching this. Don goes and grabs a bag of potato chips.
Yes.
He eats them purposely loudly or crinkles the bag. Zach then goes to a picture of Don eating the potato chips while I'm talking about potato. This is a finance show, and it was the funniest thing. Like, and if you're watching on YouTube, you're like, I don't know if you're upset by it, but it's funny as all get out because of Zach's producing. Zach's producing has added a dramatic increase to the quality of the show. It's amazing. Zach's greatest piece of producing ever.
Thanks.
Yeah.
Yeah, it was good. It was
So,
great,
but
Don getting the chips in the middle of the show.
Oh, it was
perfect.
great.
Oh, perfect.
Little addendum.
Yeah.
I had Utz sour cream and onion this week.
Really?
Much better than Lay's sour cream and onion.
I give you that. Utz has better flavor. Do you have the regular kind of normal textured potato chips, or do you have the kettle cooked type?
Not kettle cooked.
Yeah, the
normal.
kettle cooked are hard to do flavors on for some reason. I don't know. It's because if it just comes off, like it's hard to find good kettle cooked flavored potato chips. Oh, but you know who does them well? Maui sweet onion. I don't know who makes them. I actually think it might be Frito-Lay, but there's a sweet onion flavored.
Had it.
Yeah, they're good. They're super good. But
We can't do this again.
No, I'm not. I'm not. I'm done. What I'm about to say though is I couldn't have done the show last Friday. I think it'd have been the first time I've ever called in hurt to the podcast. I got something for you, coffee safe. So one of the 5 ways I do coffee, Danny, right?
Uh-huh.
So we did the show Thursday, and then Friday morning, I employed one of the 5 ways I do coffee. And you're like, well, Tim, what are the 5 ways you do coffee? Well, you can do drip, right? Like it's just Mr. Coffee Maker. You can do Panera, which is you go to the store and get coffee. You could do K-Cup, right? That's not too bad. You could do French press. All of these I employ. Or you can do the one that hurt me.
Cold press.
I got hurt by coffee last week, Danny, and probably Zach. That's a show title. We got the Doors, and if you can figure out how to do I got hurt by coffee on the show title.
I got hurt by coffee.
Yeah, figure that out.
Yeah, all right.
I don't know if that's a smiley, like a frowny face with a coffee cup. I'm not sure what that looks like in your brain. So
the end was about a girlfriend breakup, by the way, not death.
Oh, sweet.
Good.
Okay, we're good. I feel better about that. I'll just make sure.
You're not dying.
No, not to my knowledge.
Yeah.
This bit might be, but I'm not. But this is the honest to God's truth, and I'll show it to you here in a second. So it's early morning. Like I'm keeping weird hours we feed Graham late. We're getting up early with the kids, and so I put a kettle on. It's an electric kettle of boiling. If water gets to a boil, and then you do a pour over. The flavor I find is the best flavor of coffee. I really enjoy that flavor when I do the pour over. I don't know what the hell happened to it. I've been doing this pour over forever. But I normally set the cup on like it's a dual sink. And you know like how you have the little piece in the middle?
Yep.
I normally set my cup in the middle, like where there's a little room, because if it spills, like if it runs over because I poured too much, it just goes right into the sink. For some reason, I was washing Graham's bottles. So for some reason, I was doing it to the left side, and I'm left-handed. So this all makes sense to me because I'm left-handed. I'm pouring. I did something where I didn't clear me turning around and going to go put the kettle back on its receiver.
Uh-huh.
I knocked over the funnel type device that sits on top of the cone.
Oh.
This son of a gun, then in an act of God, like only God could have done this to like got my attention about something. It bounces out of the sink. The water's so hot, it like hits the sink. The sink's like, get out of here. You're way too hot. And it bounces up on me.
Oh.
What's boiling water? 212 degrees Fahrenheit?
Pretty hot.
Freaking hot. So I ended up with 2 second-degree burns. Second-degree burns.
Oh, no.
Hold on. I won't do the whole thing.
Wow.
Thank you.
Oh,
Thank you.
so I had a T-shirt on.
Oh my God.
Oh, Jesus.
Wow.
Lord.
This was a lot worse. This is a week later.
Wow.
This was. It goes down, and in a weird way, the ending burn on my stomach looks like Australia.
Did you go to the hospital? I mean, that looks pretty.
Down under.
I did.
Yeah.
I'm so Tiny goes, why are you saying the F word over and like she's sitting on the couch and eating Graham.
Yeah.
And I'm not screaming it because I'm just like the pain was so intense.
Yeah. Oh.
I'm like,
So did you go to the ER or anything?
I toughed it out, and I'm like, this is some intense pain, like right, and because luckily I had my glasses on. And because it splashed on my glasses, it burned my neck,
Wow.
all up and down my arm. Like you can't see it because it's. I'm healing fast, which is pretty awesome. So like it's just searing pain, right? And then instantly, like within an hour or two, it's all blistering over.
Yeah.
And so she's like, you probably need to make sure you those don't get infected because I was not going to go anywhere, right? And she goes, and so I bite the bullet and I go, and the guy looks at me and goes, that's intense. I'm like, thank you. And so this is the best it's felt. Yesterday was the best it's felt in a week, but I'm telling you, man, it's all, I couldn't concentrate on anything on Friday. I was just like, okay, that's a little less pain.
So did they just give you bacitracin or Vaseline?
No, it's starts with an S. It's a burn cream.
But it's an
it's
ointment.
It's a burn ointment, so you don't get infected. Sweet baby Jesus, I've never had coffee hurt me like this.
Well, I imagine not.
Good Lord.
Right?
That looks rough.
Dude. I like it was just a freak accident, right?
Yeah.
And Remy was because I was saying the F word, so you know, like when a dog gets hurt, and like it's like if a dog's kind of hurt, they'll just like bark. But like when a dog's really hurt, like whimpering, it was a whimpering F word. And so Remy picked up on a whimpering F word, going, "Is Dada hurt?" And I'm like, "No, man, I'm good. This is fine." You know. And then the kids can't figure out why they can't climb on me. Nora climbed on me, popped all these blisters, and I'm like, because I was trying to. Oh, it was awful.
Have you laid off the pour over?
No.
No, not at all.
I was a little gun shy, right?
Right.
So the next day, later that day, the next day, I'm like, you know what? I'm going Keurig. This machine can't hurt me. Right. You know, let's just knock on wood that this machine can't hurt me, right? And so it was the following day that I'm like, I'm getting back on the horse. And I'm just like
48 hours.
Oh my goodness, right? Yeah, I'm just slowly
glutton for punishment.
Oh
right.
my God. Yeah, but we're
But this time you had goggles and rubber suit.
Holy hell, right? Like, and Tiny goes, were you naked in the kitchen? I'm like, no, I had a shirt on. Like it was.
Oh, that would go right through a shirt.
Yeah, boiling water, it goes right through that.
I was astounded at how badly it burned through the layer of t-shirt. Just astounding. And with that, we start the show. A lot of news, I'm telling you. So, look, the last video I did, interesting what's happening here, what's happened with markets since the last video. My last video was Wednesday. Not this past Wednesday, but the previous Wednesday. It was, I didn't title it this. I said this never happened, right? Like the screen of stocks I turned up, it doesn't happen. But I started out the video saying, is this the start of the summer rally? Like that was some of the first words I spoke after I talk about how you're America's fiduciary. And it was predicated on the dollar hitting the third ATR and coming off. And what in that relationship between the U.S. dollar and
weaker dollar, higher stocks.
And that's what you've gotten. That's what you got, right? With the dollar this week, I believe, is off like 3%, with the NASDAQ up about 5% for the week as we taped the show. And I believe those numbers are still true. They were true last night. And that's the market we're in. I don't think, like, I'm not going to do another podcast here, but like, well, what do you think the market's going to do? Hell if I know, right? Like, because it's a market and anything can happen. Like that. We could have put in the lows for the year, right? Could have. Do I think we did? No, I don't. I think that there's an opportunity here to have 5% up in the NASDAQ is a great week. But that's what,
especially after this year.
well, that's interesting that you phrase it that way.
For most people, if they don't have a sell discipline, yeah.
Because that's what happens in a bear market, right? Like the easy markets, the ones that you enjoy are the grind higher, right? They're not too quick. You don't feel FOMO. You don't feel like you're missing out. You just
consistent.
Yeah, like, oh, pull back to the 8. Maybe I'll take a chance. Pull back to the 21. Maybe I'll take a chance. And then they just grind higher, right? This market is quick, and the quick markets are they're emblematic of what happens in a vicious bear. And so, well, Tesla had good earnings. Look, all these companies, it doesn't matter what you think of their earnings; it's how the market interprets them, right? But what took place last night, there's a lot more SaaS software. There's a lot more software or platforms like Snapchat than there are
Users will use them.
Yeah, like you're going to see more of this, right? And you're going to see companies pulling back on spend, on advertising, people becoming. I don't know who uses Snapchat. I don't want. It's really easy to come out and just trash Snapchat because I don't use it. Maybe there are people using it, but I think there are too many platforms. This is a personal opinion. It doesn't matter what I think. Mm-hmm. That's a stock that has a lot of shares outstanding and is $11 a share. I think it's $11 a share still. Man, there's a lot of money tied up in these things. You know, what is a Facebook worth if people are going to pull back? Or is Facebook kind of like the, too big to fail in terms of it might be the last platform? And the reason why Facebook has this network effect, like the staying power, I believe it's because moms are on. I don't know many moms on Snapchat, right?
Right.
Not that I'm hanging out at the Kroger's produce section picking up moms. Hey, you on Snapchat? No. But they are on. Anymore. But they are on Facebook. And you might, and I don't know if they're on Instagram, but Facebook has the staying power. Danny and I were talking earlier this week about Twitter. I think Twitter has a problem too. Like Twitter.
It's called Elon Musk. No,
Twitter's got problems.
Yeah, Twitter's got a lot of problems, but I think one of them is this very small, minute echo chamber. And it's that really Elon brought to bear to the general population. I think people on the platform knew this was an issue, but there was, I'll give you a movie example. Zack Snyder's Batman Final Cut. You guys remember
Justice League?
Justice League, is that what that's called?
Yeah, the 4-hour black and white version of Justice League.
So there wasn't that much, but it got so much hype when they released this 4-hour version of a movie that flopped a year earlier. Yeah, this Justice League movie flopped a year earlier. So they're like, we got to get our money back. So they release a 4-hour version and they start hyping it up. But as it turns out, the people hyping it up were all bots. This is a story. You can Google the story.
Yeah, it's really funny.
Okay, so Zach knows what I'm talking about. Yeah, it turns out that it was just bots in an echo chamber amplifying HBO's or Time Warner's message about this movie, trying to get buzz out there. Mm-hmm. It wasn't real. That story literally that movie, that was done a year ago. And so now think about all the news stories you've bought into, or they're not news, just stories. We'll just call them stories. Like, because if we say news is news, what's news, right? Like, is news fact? Okay, so, but let's just say stories that you bought into, you really have to question
the validity.
Thank you. Yeah, I was going to say truthiness, but your word's much better than mine.
Thank you.
Yeah, the validity of what you're reading. But the problem is newspapers and television, the two main sources of news in America, right? Mm-hmm. They've been using Twitter as their public editor desk, as where they go to get stories and to get news so they can get clicks, because the whole business has been turned upside down. And so what a problem these platforms have, right? And if people start leaving those platforms, well, where are they going to go? They don't have to go anywhere. We could go back to not engaging on those platforms. Like, that's a choice, right? Because it takes time out of your day. Zach, do you know the average screen time of a Facebook user? It's like a half hour. I asked you a question, didn't give you a chance to answer, and then I just said it's about a half hour.
Well, no, I appreciate it because I didn't know.
Okay, fair enough.
Like
it's
a rhetorical question.
Yeah, I didn't mean it to be rhetorical.
No.
I meant it to be like, I think it's about a half hour. I didn't know if Zach had a more accurate number.
I had no idea.
Okay. They want screen time.
Mm-hmm.
There's only so much you can watch. Like, there's a lot of good television out there. I can't watch it all. Right? Well, that's because the kids dominate the TV. That's another issue. But there's too much. And it's hard to have a breakout hit. Like, you like Yellowstone, right?
Mm-hmm.
I don't know when I'm going to find time to watch an hour-long show.
Right.
Yeah, it's hard. And so, but there's a lot of good TV out there. Facebook and Twitter just take away from that. Like, there's too much. And I wonder if Snapchat, why would you even buy Snapchat? Like, if you're Facebook, my going in, you buy good businesses. Like Warren Buffett has this. Like sometimes we go after Warren Buffett because people can't invest like Warren Buffett, but they want to quote Warren Buffett.
Emulate him, yeah.
Yeah. But he's right about the businesses. They're good businesses. They're not rehabs. They're good businesses run by good people that he wants those people to stay on to run those businesses. If you're Mark Zuckerberg or whoever would be Google interested in Snapchat, just let it run into the ground. Let it just evolve into nothing. You'll get those users because if those people want online,
They'll have to go somewhere.
They'll have to go. If they want online interaction, they'll have to go somewhere.
You get it without paying.
Yeah, and you just let it go, right? And I think you're going to see more of that happen. And so it's interesting that you talked about a sell discipline, right?
Mm-hmm.
So I told you I got notes, right? You ready for a note?
Sure.
Yeah, man. This year, this is from I saw this on Twitter. Can we just let the irony settle there? I like Twitter. I just don't know if it's a platform for growth right now. I think it's a platform that you engage other people in. I don't know if you go there to grow per se. Radio Shack, do you guys see this? Radio Shack's trying to make a comeback. But they're
quite an interesting feed they got.
Thank you, man. I see now. I got Hunter. I can't see you, Hunter. The monitor's turned away. But now, yeah. Can you describe, Hunter, Radio Shack's feed right now? It has nothing to do with electronics.
Yeah, I would say the antithesis of whatever you think Radio Shack Twitter would be. It's just memes and jokes and some not crude humor, but it's like they've given someone the ability to do whatever they want to do to get attention for Radio Shack.
Yeah, that's that. Like Radio Shack, I don't know what. There's a meat brand or there's another brand that kind of did this a couple of years ago, but they've stayed on brand with giving you their opinion. I want to say it's not Oscar Mayer Wieners, but it's a boring brand.
Steak'em.
Thank you.
Steakums.
I knew it was meat. I just couldn't figure.
Yeah.
It's Steak'em. Steak'em's got opinions on like legitimate. Go to their Twitter account and they've got legitimate, deep opinions on
They
things.
got hot takes.
You know what? The show title is definitely going to be some Steak'ems, right?
Steakums, right?
Yeah, maybe some Radio Shack. I don't know. Radio Shack though is, I don't know what their goal is or what the end state is, but it's aggressive. So anyway, I'll leave it at that. But this is from Carl Quintanilla from the CNBC. The year BlackRock chalked up another this year, BlackRock chalked up another record. The largest amount of money lost by a single firm over a 6-month period. In the first half of the year, it lost $1.7 trillion of client money.
That's some real dollars.
I want to go back to incrementalism.
Can they call the Fed hotline for the makeup for it?
So, if you don't know, go ahead, Don.
Is that because the ETFs went down? Is that
Yes.
all that is? And it's
Market
really
decline.
not real.
It's market
It's not
decline.
real. They didn't lose client money. They own ETFs that clients are invested in that went down.
So
BlackRock,
yeah.
It wasn't a conscious decision that BlackRock did something stupid to lose a bunch of money. It was because they provide ETFs that people invest in.
But they
People invest
really
in ETFs, and the ETFs went down.
But they really push that buy and hold pie chart mentality and not trading usually. They're not talking about active trade. Well, yeah, I see your point.
I'm reading, Don. Continue to debate that because
That's like saying Vanguard certainly lost a ton of money.
Well, we always
So
say it's a cheap way to lose money fast.
Well, yes, now what's your quote there?
But it's the Vanguard, the least expensive way to have a 50% drawdown.
In a bear market.
Right.
BlackRock's number 2. It's the B squared, Bogle and BlackRock.
So Don, they're the iShares folks, is what BlackRock manages, and so going back to incrementalism. So here, there's a couple of things that we do that are much different. The one, we're transparent, and you're like, well, what does that mean? Like that sounds like a buzzword. We give you the strategy every night. Like we tell you exactly what we're thinking, how we're going to deploy capital, how we're going to maybe pull back capital, And then
And if you're a client, you see it in real time.
yeah, and a couple more shots down the road, what could be setting up? Like it's strategy in real time. There's not many people that do that
Oh no, mutual funds just give you the top 10 holdings at the end of the quarter.
Well, even if you go to the strip mall advisor next to the vape shop,
Yeah.
that person, there's a really good chance that person doesn't know how to interpret the market's action by price, will make a mistake, a fatal flaw of mixing in macro information and trying to time it to stock market information. Well, what could you mean by that, Tim? Case in point. The NASDAQ, excuse me, is up 5% this week. Has anything gotten better in the global economy, Daniel?
No.
Exactly. And that's the conundrum that is markets. Like it bad out there, right? But the market went up 5% this week. And before you yell at me, and you're like, well, Tesla had a great quarter. Like, Tesla, it doesn't matter what Tesla. It just matters it's the market, right? The market every day has economic reports, people reporting earnings, people commenting, upgrades, downgrades. It's all one big game. And so when you go to the strip mall advisor and they try to tell you, they try to mix in macro information, macroeconomic information with the only indicator that tells you the truth about what's happening, price, it oftentimes doesn't sync up.
Mm-hmm.
And so when I'm talking about incrementalism here with Revere, the difference between what the incremental would be, well, we just do technical analysis at a strip mall advisor next to the vape shop. Well, that's not enough. Because without being able to interpret the macro information on one side, the price information of the market on another side, and then fusing it together with a sell discipline. See, that's not incrementalism. That's actually game changing. And so most people can't sell. And they can't sell because there's a group of people that I believe are the most miserable people on the face of the earth. Who do you think are the most miserable people on the face of the earth?
I was going to say something very
Sarcastic.
Political discussion.
People that argue stocks.
Right.
They are the most miserable people, some of the most miserable people on the face of the earth.
I was going to say the advisors at stripmalladvisor.com because
No, I don't know if they're miserable. But people, and it doesn't matter. Like there's a lot of there's IBD personalities, people that it doesn't matter what it pervades the internet. They argue about stocks, and none of it matters. Like Hunter is going to in a few minutes is going to give you a list of stocks. You've never heard me, Hunter. How many shows have you done since October? Like October of 2020, right? That's when Hunter started.
Got to be close to 100.
I've never said boo to Hunter about any stock he's ever mentioned. Because it doesn't matter. Like Hunter's information matters. It doesn't matter what I think about the stock. And I've never actually had a contrarian opinion about the stock. Do you know why? Because when Hunter says, hey, can you bring up XYZ stock? And then you see it on the chart, it doesn't look like hot garbage. Like he can walk you through a consolidation, a price point that if it breaks higher, that's trendy. People get into stocks for them to go up, right? I know there's people that's short, but most people get into stocks for them to go higher. And Hunter's accentuating those names. So why on God's green earth, like if Hunter mentioned a stock and I'm like, well, I don't, Celsius, I think they own Celsius, right? Yeah. So, which is a drink. Like, well, I don't drink Celsius, and Celsius could become the new Monster Energy where, the government targeted them. Like, I don't feel like any of those things. I literally just made that up. But people that argue stocks are miserable. They can't, and I believe, and I've seen this because I used to speak to thousands of people a year, and I know this personality type. People that argue stocks also have trouble selling stocks.
Well, yeah, they're arguing their position. They're trying to justify why. I want to clarify what you're saying.
Yeah.
So there are people that buy a stock, and I hate it when I hate, oh, you just buy this stock and stick it in your drawer.
Right.
This is stock you'll hold forever. What? That's crazy. And so people will defend the story. And that's why you always wanted to separate Main Street and Wall Street. Because right now you were talking about the economy doing bad and the global economy doing worse. But the market's starting to rally. Now, whether this is just a bear market rally or whether this is the next primary uptrend, we'll know in hindsight looking back, but we're gonna manage like right now it's a bear. We're ready to, we're gonna protect profits of the companies we just bought, and we'll sell those if they start to roll over. If the market continues higher, we'll add a few more positions. But it doesn't matter what the stock does, what sector it's in, it's only is it acting right.
And so how does that tie in to things that I've said on this show, right? Like I've advocated for people at home that there's too much fear mongering, right? Like there's a lot of fear of missing out. Like I believe that in order for you to never leave the advisors that just buy and hold, the commercials try to make you feel warm and fuzzy. Is Deliverance a movie that tries to make you feel warm and fuzzy, but then or what's the woman that takes in the guy who gets hurt and then Misery, right?
Yeah.
Like, and she pounds his feet.
James
Like,
Caan, Kathy Bates.
Is that what that? Okay, yeah, it's Misery. Like they're like, I'm going to take you in. I'm going to take care of you. You're here at stripmalladvisor.com now, and really, they're going to break your ankles. And is that what happens in that movie? I
think so.
I've never seen this movie. It's
painful to watch.
Anybody can get you in, Tim. Who's going to get you out?
That's exactly it. And you can't get out because what they do is they peddle fear.
Fear of missing out.
Don, what's the stat where, like, if you leave these 5 days in a market, like, you're going to miss all the gains? Like, you know what I'm talking about?
Top 10 days.
Yeah.
You miss the top 10 days in the market, you lose 49% of the gains. The problem is those top 10 gains are clustered around some of the biggest drops. Mm-hmm. So they all happen. The top 10 biggest percentage up days all occurred in bear markets.
Yeah, and so you need this ability to sell. You
also need an ability to buy back in once the market starts firming up again.
And so I've advocated triggers for people that have been listen, and everybody who's ever traded in the markets has been paralyzed by fear, has been a deer. Let's not pretend that no one out there is an automaton. Okay? That is a made up word. I don't even think that's the word I want. I wanted robot, but I went with automaton. I'm like, not even sure what that is.
Automaton?
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 Autobot?
Robot.
Oh, Autobots, definitely.
Autobots roll out.
Yeah, they are Transformers. But if you look at like on 7/15, what is today? Today's the 22nd?
Yes.
7/15 was the market was at 38. Let me just make sure I'm right. Like 38.66, I believe. More than 100 points higher now. And what happened on 7/15? A 5/8 cross, a 5 exponential moving average. You know, like triggers, like trigger events get you in, so you don't have to feel like you're missing out. Well, if you never sold, you wouldn't be missing out. But you rode the son of a gun down.
Yeah, you lost 25%.
Yeah. Like what if you can't convince me otherwise that there are people out there that maybe there are. Like, I mean, it's a form of
masochism.
Thank you. It's a form of masochism that I rode Snapchat down from 50. It's trading 11, but when it comes back, it's going to feel good. Spank me.
Glutton for punishment.
That's what it is.
Yeah.
Is that what masochism?
Because I have a 5-year time horizon.
That's exactly it.
Right, yeah.
The only people who have 5-year time horizons are people in losing stocks. You can't tell me, hey, would you rather make 10, 15%, 20%, 5%? The market's up 5% this week. Hunter, what's 38.66 to 38.96 percentage-wise on S&P, please?
38.66 to 38.96?
Or 39.86, pardon me.
That's about 3%.
3%. You could just buy the S&P off the trigger, sell right now at this moment in time, 10:23, and sell it. And you're up 3%. But Don, as expertly laid out here, There is some goofball out there that says, I got a 5-year time horizon. And they've written it, they've written it down 50%, 60% to make back 20%. I can't help
My
that person.
thesis is still intact, and the EBITDA suggests proper valuation.
EBITDA. If anybody ever says EBITDA when discussing stocks to you, run like hell. EBITDA. It's the crabs of the stock market. Run. You don't want to touch it. It will hurt you like coffee did to me last week. EBITDA. Well, Tim, that's part of the fundamental picture. Right. But you know where that shows up? In price. Well, how does that show up in price? By demand. Well, how does that show up? By volume. Well, what do you mean? Most people in the free world and China, they want the best products. They don't want junk. So what do? They pay up for high quality merchandise. That's the secret behind what Bill O'Neill discovered, that if you take 7% fundamentals, 30% technicals, which are the price and the volume action and a bunch of other stuff, that's the magic formula. That the bedrock that good stocks eventually are built on is the fundamentals. And then the technicals are what get you to take action. Anybody
Meaning
mentioned
they're timely, yeah.
Yeah. And people can't put that together. But during my last podcast, after 409 episodes on 410, I have now finally put that together. But you had to listen to a story about coffee and a rehash of potato chips to get there. But that's what, if you find that, because I believe nirvana in investing is, I believe that this is what everybody wants, that they can consistently make money in the markets. That you take a setup, that you know what your setup is. You take that setup by trading that setup, and then when that setup isn't, you just know by looking at it, by the price action, you know what's happening. And you're like, okay, this is not how good trades go. I'm going to exit for somewhere between, say, 5 and 8%, depending upon the market. I'm going to take that loss, and I'm going to redeploy that capital when my setup appears again. And it doesn't matter in what stock or what ETF or what commodity. Most people.
We do need to point out with Nirvana, though, that in music, Nirvana sucks. They ruined 80s good time rock and roll.
Oh my goodness.
That is mention that on this.
That is a hot take.
On this going forward.
That is a hot take right there. Was Dave Grohl the drummer?
Yes.
Of Nirvana?
Lead singer of the Foo Fighters is the drummer of Nirvana. It's weird watching videos. He was like 12. He's a kid. Now he's like, 45.
Yeah.
So what happens if you live in constant rain in Seattle? Your depression just takes over, and it's
the whole swath of the country.
We're having such a good time party to why am I so damn depressed? And my parents.
Well, you know, the best export out of Seattle was Fraser.
I thought you were
going to say coffee.
No, I was going to say Fraser.
Love Fraser.
How many people think coffee's grown in Seattle because of
Seattle?
Like coffee's grown in different
they're
climate.
Just the aggregator. They're just the middleman.
They're just the roaster, folks. Listen, a bunch of other stuff to cover, but I think that encapsulates what the problem with incrementalism, right? Like you could apply incrementalism to anywhere, but there's no difference. I mean, if you're really being honest, folks, and you could say your relationship with someone might be different because you know them a little more. You got invited to the barbecue, you got sucked into the Kool-Aid, but there's no difference between Bank of America, Edward Jones, Chase, private wealth, right? Like they call it private wealth. Like it's always strip it away and say, tell me what gets you out of a stock. What makes you sell? Things like time horizon are a death knell to your
you want the market's time horizon.
Yes.
The market's time horizon and the market's risk.
Because there's so many things that happen between someone else's time horizon and your life. Whether it's the birth of a child, whether it's a sickness, whether it's a marriage, whatever it is, you might not have had the 12 to 14 years to wait for Microsoft to finally break back out. and but that's the truth.
No, it's a great analogy.
And
So that was a fundamental reason. Ballmer took over and screwed it up because he was going on the old thing. And then that started showing up in the charts, the price. Okay? When Nadella took over and he started doing the subscription base and turned Microsoft around, the fundamentals started improving. That was also reflected in price. So you need price as your confirmation.
And so this will be, after this show, this will be, I can't foresee myself doing, I'm not going to ever stop trading, right?
Oh, sure.
And I'll talk trading. But I can't see myself doing a podcast. Or this will be the first time since 2008 that on a daily, if not weekly basis, I don't speak to traders and investors. That's a long time. Mm-hmm. And so, and I'm going to leave it with this. When the show's not over.
There was a little hiatus when IBD kind of got a little, they were worried about you. They wanted you to get pre-clearance to talk in the markets.
Yeah.
So we had to take a few months, but you're right. It was continuum all the way from 2008 when we met down at that trading expo.
And but I'm not even going to delve into, because this really is emblematic of this period. I think when we look back at the history of time, like there's going to be periods of market, of economic times that we're going to look back and we're going to wonder why and what and how. The EU, so the European Union, they raised rates for the first time in 11 years. Mm-hmm. And folks, this might be the only time we get to say this. They raised rates to zero. We don't know how this period of time, like, I'll tell you what, Amex came out with a quarter. I read a little bit of it this morning, where they're setting up some money in case of default later. But right now, I don't know if Amex has a more conservative portfolio than some other credit companies, but they're seeing the lowest default rates. Like, they're not seeing default is what I'm trying to say. They're not seeing issues. Like, people are like, the credit markets are getting weak. There's a lot of credit that they're not seeing defaults. So they're not saying there's not a lot of people with credit out there. They're just saying they're not seeing defaults. Like, it's a strong.
They got a higher credit quality though.
There's Sears, by the way, interesting side note, Sears, the credit card, like, used to be like one of the highest bars to clear to get credit from Sears. And how'd that turn out?
Right.
Yeah. But that's not the credit problem. That was a store mismanagement problem, then getting ransacked by the hedge fund trader that just ran it into the ground.
Right. Sears.
Yeah.
Yep.
Sears. Yeah. And so, anyway.
They also had union pension commitments that were an absolute ball and chain around their ankle.
Yeah. GM had that. They just had to start GM over. Reset.
Yeah.
Right? And so, anyway.
Way to get out from under that.
I don't know if there'll ever be a period of time. Here's what I do think. I don't know if there'll ever be a period of time that we can say that some major governing body raised interest rates and took them to zero. That's the first time in history, right?
I'm pretty sure. Just like the first time in history a few years ago when they took them negative.
Unbelievable. And so I don't know how this turns out, but I think the economy. I think what's happening here is we've raised rates, right? And you just got to do the calculus, whatever that calculus is. Like, those string diagrams in a police show where they've got like pictures up on a wall and it's yarn and it's going everywhere. Do that calculus, right? Oh, put that on the show tile, Zach. Yeah. Do that calculus, and then tell me how far we have to raise rates to make it okay in your brain that it equates to, I used to pay 18% in 1982. Whatever that math is for you, do it. And then I believe what's going to happen with Jay Powell's Fed is they're going to then lower rates in 2023.
I agree. I think they're going to have to say uncle after one or two more raises.
I
think it's going to slow it down too much.
And by the way, that slowdown will be vicious. And it, like this, the gradual, it won't be like it doesn't, because it's an up week in the markets. You might not think that this is true, but I want you to just keep in mind the Snapchat example here. Snapchat already had bad quarter. It was down 35% from their last report.
Mm-hmm.
Then they came out and warned shortly after their quarter, and it went down again. And now they've had another. That's an acceleration of bad.
Yep.
And when people, there was a commercial about this. I think it was for Verizon. It was a bunch of people in a room with a tiny exit, and they're all rushing for the exit, stampeding, right?
Mm-hmm.
That hasn't happened in the market yet, where it's been the rush to like, oh, wow, this is really bad.
It was, quote, a shallow bear market over 20%, but not like the economic crisis yet of 2008.
Yeah.
Doesn't mean we won't get there.
Yeah, and I don't know. I mean, maybe MMT, whether you agree or not, MMT is being used in this country.
Modern monetary theory, yeah.
And so maybe MMT doesn't allow that moment of capitulation. As things become more unobtainable for folks, whether it's auto loans, whether it's mortgages, if credit were to get tighter, you'll probably see some kind of rushing for the exits. You'll know it when you see it, right? Like you don't have to wonder what it is.
Here's the question: will you take action when you see it?
Yeah,
that's the big thing.
And so it's kind of like this market, right? You kind of don't want to. I mean, if you look going all the way back to June, like June, what was that date here? I'm looking at my calendar, my screen here. June 9th. Big drop, June 9th. It's hard to buy the breakouts in this market. Because
you got to be pretty seasoned. You got to be good at it.
Yeah, and it's real tough. And you certainly don't want to do it without a sell discipline, because there'll be a rushing for the exits moment. You won't be able to know when, like they don't tell you when it's going to happen.
Well, you got to pay attention.
Yeah,
Donald talk about a couple breakouts that he did.
Yeah, and that's it. It takes a skilled hand to know that, right? And that's not being pompous. That's just like
experience.
If you're going in with something saying 5-year timeline, be prepared to lose some money, and nobody wants to do that. And so the consistency you seek comes from being able to recognize when it's not working and cutting your losses, or maximizing your gains by selling. And so with that, I'll tell you what, let's go. You want to go Hunter?
Yeah, let's go to Hunter.
I'm sorry. You had.
Let's do it.
No. Next week, listen, next week I'm going to talk about 401ks and 403bs and pension plans and retirement. Right. I'm going to talk about how you need to gear up and get ready and all the pitfalls that you need to be watching out for.
Yeah.
All right, Hunter.
So it's me. All right.
It's you, baby.
It's all you.
So we had an individual reach out to us and ask us about chip stocks or semiconductor stocks, essentially. And so in spirit of that, it just so happens my analysis and research leading up to this podcast today, I've got a number of them I want to talk about. And for no reason other than the fact that their price has been showing relative over the course of this year. So Don, I'm going to run through about 4 names here to start, all in the semiconductor space. So on semiconductor, ON. And what I want to point out here on this name is it's a little bit volatile, as most semiconductor names are. But this name is actually showing up in a base here on MarketSmith. It filled a gap from last October when it recently made those lows around $44, $45. And it's been on a pretty vertical move up, back above the 200-day, back above all those shorter-term moving averages as well. So just like I talked about in the video last night, the indices are short-term extended, and they are pulling back today. So are a lot of stocks. But I found this one to see as that 21 is starting to hook up through the 50, the 8 is coming up through all those moving averages. It may consolidate back down to kind of that cluster area of those moving averages. But the point here is ON has a RS rating of 97 amidst all the turmoil that's happened this year in the markets. So, and that's kind of the names I'm about to highlight in the semi space, is these are names with constructive RS ratings that have made very sharp recoveries here. So ON semiconductor, a lot of these names do have earnings coming up. Keep that in mind. It's earnings season. But ON, the first of the group with a nice RS rating and a pretty vertical response from the lows. I mean, 476 to just over $60 yesterday. So On is the first name. The second one is KLA Timcor, or KLAC is the ticker here. Another one that I believe, RS rating is a 91. It's running up right into the 200-day moving average, but you see a very similar pattern of vertical response off of those lows, up from 282 to about 355, 360 here, and just pulling back a little bit. But again, this is relatively normal to see some pullback here after the type of move that we've had in individual names and on the indices over the course of the last week to week and a half. So KLAC, RS91, and the point also on all of these is they've held up most of their peers, which is always something you want to be looking for in a bear market or a bull market, is what names within a group sector holding up better than the rest, right? It's just the leadership, certain industry group or within a certain sector. So KLAC, kind of similar to On, needs to get back above that 200-day, but possibly starting to make a pretty big move here. Nice volume on this recovery as well. The next name is ADI, Analog Devices. Very similar type of pattern here to what we just looked at with KLAC. Very vertical move off the bottom from 138 up to about 165 or so, right up into that 200-day. Again, it would be nice to see some pullback or consolidation here after that sharp move up, but attractive volume patterns over the course of the last week on these names, because again, this is a RS rating of 87. You can see the RS rating has been trending higher since about April, actually. Had pulled back with the rest of the market there into May and into June, but a vertical recovery here as well on ADI. And last one, Don, QCOM, which recently reported earnings and had a nice response. This one is actually poking its head above the 200-day RS rating. I'm sorry, they didn't recently report earnings. They report soon, but above the 200-day, same kind of pattern here. Vertical recovery from the lows, filled the gap from all the way back in last October/November as well. And so the highlight here is these are four names. This is showing relative strength. They're all around a 90 or higher on their RS ratings and have made very strong recoveries. So again, very normal to see these names possibly consolidate, give back some of that move that they made. But what you're looking for, if this market is able to sustain any type of positive momentum, is that they would consolidate in a healthier, find support where you would expect them to find support, and ultimately continue moving higher here. So 4 semiconductor names with nice RS ratings, strong recoveries over the course of the last few weeks. So now we're going to go to the drink and beverage area. And so we've talked about Celsius, but there's one space, and that is MNST. And I want to point out here, it's right around the 21-day at this moment in time. I think it's actually a tiny bit below it with some of the price action we're seeing. But there is a nice double bottom pattern picking up here on Monster. And what I want to point out is if Celsius is going to act well, you want to see other names in the group acting well. So Monster has been acting well. RS line has been on a vertical ascent here basically since about February. It's had a normal pullback here after running up into a resistance level right there around 98. Don showing off his Monster there as he should. And
Jeez, I thought he was doing construction.
A little noisy back there. It's all right.
But Monster, a name in a probably a lesser talked about group in general, just food and beverage and beverages, non-alcoholic. It's been standing out for a while. So Monster, a name to keep your eye on. See if it can possibly find support here in this like 995 area and reclaim that 21 EMA. Next name, a name I've talked about a decent bit, GTLB, GitLab. This is a new, and I know you look at this and you say, okay, well, Hunter, this has had a horrible decline, et cetera, et cetera. The RS rating is a 53, and I would say, yes, that's true. However, the 6-month RS rating is a 94. The 3-month RS rating is a 96. And that's indicative of the fact that we've seen growth stocks start to show some light over the course of about the last 2 months or so. So GTLB, it's even showing relative strength today compared to there's a lot of growth names that are 5, 6, 7, 8, 9% today, which, volatility is part of the game with these types of names. But I like the way this has acted. I like the way that it's not necessarily just fallen out to the downside today. And I like the story on this name in general. The revenue continues to stair step up at a nice rate. And like I said, that 6-month and 3-month RS rating is there. So sometimes you have to look a little deeper than just the 12-month trailing RS rating. Moving along here, a name that's had a really, really tough year as well, along with like GTLB, Snow. And the reason I want to point this name out is two primary reasons. Again, it's having a bad day today. A lot of growth stocks are. Market is pulling back in. But this has broken a downtrend line. That's the first thing I want to point out. There's some subtle signs of accumulation in the volume pattern as well. Secondly, there's a path to profitability here on Snow as it moves into 2023 and 2024. You can look at that in Market Smith. And there's massive institutional support for this name. There's about, if I'm not mistaken, roughly 1,500 or so funds in this name. And that's continued to move up even amidst this pretty line. I mean, from 405 to 110, it's about a 75% pullback. It's brutal. But there's institutional support, downtrend line that's been broken. And there's a path to profitability on a name that's initially, like a year or two ago, that path to profitability didn't seem so clear. You can now see that starting to show up in the fundamentals a little bit. So two very high beta growth names to watch, GTLB and Snowflake. And then lastly, another semi name, and I know I'm giving a lot of information here, but this name in particular is one of my favorite names in the sense that management executes and the fundamentals are spectacular. And it's AVGO Broadcom. And again, this has had a nasty pullback, just like pretty much everything out there. But what I want to point out here is the fundamentals continue to be excellent. The profit is there. The revenue growth has continued to be there, even amidst, the poor economic conditions this year. So again, a nasty pullback, but it also has reclaimed this 500 level. At the chart, that 500 area was major resistance before the breakout in the fourth quarter of last year. So that 500 level, major, a place you could potentially even measure risk against. And fund ownership has continued to grow as well. As big as this stock is, and as much fund ownership as it already had, up from about 2,800 to 3,500 funds in it over the course of the last 4 quarters. So there's some positive things going for it. So for the most part, this stock tends to hold up relatively well compared to the market and compared to a lot of other semi names. I'm not, immune to the fact that it went from 677 to 460. But I think that 500 level is a major line in the sand. It danced around below it and has ultimately reclaimed it. So it's a good spot to watch. The fundamentals are solid and fund ownership continues to grow on a name that's already massive. I mean, this is a $200 billion company. So that is my list today. I know it's a lot of information, but a list that are showing RS in a number of different industry groups or that have some positives going for them in the sense of institutional sponsorship or path to profitability, those types of things. So that's all I got today. That's it. That wraps it up.
Okay. Don, you ready to go?
To what Hunter says, AVGO Broadcom, this had a rough 5-6 week period during this last sell-off, this last leg down in the market, but it was one of the last ones to give way because it has a 3.2% dividend. While look at the relative strength here. While money was being poured into dividend-type stocks, this is one of the few tech stocks that pays a significant dividend. I want to dovetail onto the beverage angle that Hunter brought up. Bros is one that we're watching also. Again, down today. Most growth stocks are down today, but nice, subtle price action and relative strength action over the last 3 weeks. Back above its 50 and its 21, has the 200 overhead. But this is one that's been showing relative strength also. So I want to talk about the indexes. And on our pre-market call this morning, I said beware of the straight up from the bottom check mark. And that's what we're seeing today. A little bit of a pause around this 4,000 area. I have been talking about this 4017 gap fill. We didn't quite get there this morning. We got to 4012 before we've had an intraday pullback. I haven't seen any significant news that would prompt it, but this is a normal spot to stop this 3850 to 3870 area. Right now we're at, 3970. Right now we're at 3970. I don't really want to go much lower than 3950, or we got to start being concerned about whether or not this bounce may pull back to something a little bit more significant than just an intraday bounce. But what this check mark here, V bottoms like this, sometimes they work. You kind of prefer to see a more rounded bottom like you do in stocks. But this 5 days straight down, 6-7 days straight up, we're due for a pullback. Not a surprise there. One of the things we talked about pre-market was possibly taking some profits on Celsius because it was extended at the close yesterday versus the 21 EMA 16%. A 3 ATR would have gotten us up around 87, 88. We didn't quite get there today. We got to 86.50 before it started pulling back. No heavy volume just 10% above average on this pullback on Celsius. Still certainly one of the best looking growth stocks in the market. As far as the 21 over 21 goes, we're going to have two medical stocks definitely getting punted off the list. UTHR, they had a negative ruling on patents. Somebody was suing them, and the stock clearly broke down, bounced at the 50-day moving average for now, but the 21 rolling over. This is going to come off the list, as well as Merck. I didn't see any major news on Merck, but money has rotated the last 3 weeks out of value stocks that it piled into. Look at this move up here in Merck. This was a move across the board, about a week and a half period back in the middle of June, where people just piled into healthcare stocks. Here's XLV, the healthcare ETF. You can see that strong move up there. And now we've been cooling off or consolidating over the last 3-4 weeks, that move up. And what we've seen is relative strength coming down over the past week. They're bouncing today, but relative strength coming down in healthcare, in utilities. Again, up today, but look at this relative strength move down over the last week. No progress versus the market going higher as we saw a rotation from value into growth, and also XLP showing bad relative strength over the last 2 weeks because we rotated into strong tech sectors like XLK. And the strength in the NASDAQ 100. This is one of the reasons why we love to have a big core position in SSO, because when rotations like this happen intraday, we've got the NASDAQ down 1.5%, the S&P down 0.7%. All that rotation between sectors and between growth and value takes place within the S&P 500. And this is why it's so difficult for individual actively managed funds to beat the S&P 500, because if you've got a slant towards growth or a slant towards value, the rotation is very quick within sectors and within growth and value. But if you own this core, and we like to do SSO because it's the 2 times return, when the market is healthy, meaning when the market is above the 21-day exponential moving average on the short term, preferably also above the 50-day. But note that we're still below the 200-day, and this is when maximal risk in the market picks up. This is when those bear markets that might be 20% but could go down to 30 or 40%, this is when you have to be worried about them. Right now, we paused at about 23, 24% down, and we've bounced, and we're about 16% down from the highs now. We're year to date, and I also want to note this next level above, when we're talking about resistance, this is the 100-day moving average. I just put this on the chart today as we're trying to measure potential areas above where we might stall. That's at 41.36 right now. We still haven't gotten to the 3 levels above on the S&P are this 40.17 gap fill. The low of this consolidation that we broke down with, which is about 40.75, and then the 100-day moving average 41.37. So those are the 3 big resistance areas. If we continue to run here on the downside, we certainly need to hold the 50-day moving average. And we're scheduled next week. Trend continues to have the 21 curl up through the 50. So when those overlap, that should provide, provide an additional level of support if the indexes continue to pull back. So from a high-level standpoint on the indexes in the market, this is what we're focused on going into next week.
Okay, awesome. Appreciate that. All right, Danny, I've got one last thing. So, Zach, we're running short on time, aren't we?
I think we might need the short.
Yeah, do
Potentially.
don't do the version that it drags on and you start talking about nonsense. Just tell people how to find people.
Folks, if you like what you heard, please tell a friend, tell a neighbor. Just send them to revereasset.com. They can sign up in the top right corner. There's a subscribe button. They can sign up for our daily market insight newsletter that goes out every evening after the market close. And then they'll get this podcast delivered right into their inbox. We won't spam them or hassle them anyway. It's up to them to reach out to us and contact us. You can always email us, Dan@revereasset.com, Don@revereasset.com, or any of us. Or you can actually call us old school at 855 Real Wealth. Before I turn it back to you, Tim, I want to say thank you for everything you've done for the company. It's been a great run. I wish you and Tanya and all the kids, the family, well.
Thank you.
I hope your Fifth and Cherry goes gangbusters, folks. If you don't know, he actually has he and his wife have a company called Fifth and Cherry. It is the best cutting board made in the world.
They're really great.
And it's guaranteed for life. I've got one.
We're not just saying that.
When I
great.
smoke a big brisket or I cook ribs or whatever, I got it. It's awesome. So anyway.
I'll mention that. That wasn't my one last thing, but I'll mention that. So my parents started a company 1982, so 40 years ago now, and they've been making custom cabinetry since 82. Grew the shop to about 30 fellows, and then over the course of I saw it in '08, but I didn't really understand what was happening. My parents were getting older, and I was in denial, right? And so then that took a lot of wind out of their sails, right? Because an independent family business, to grow it to the level they grew it to, took tremendous effort. And it comes from the things that we talk about here on the show: quality, attention to detail, consistency, yeah. And then my mom developed breast cancer in 2015, and then the world stopped. Right, because it's a family-run business, and then this last recession, even though it was short, people will tell you it was a shallow recession, a quick dip. When you're a small family business, and it's hard to recover from that. And so we started. Tanya and I started Fifth and Cherry. I started Fifth and Cherry to just save what they built, and I figured if we couldn't do that, then we had we're never going to expand. So we started with cutting boards and the incrementalism. So I practice what I preach. We make the only cutting boards in the world that are refinished forever free of charge. And so, why is that a big deal? Because this still isn't the last thing that I want to cover. It's something economic related. But the reason why it matters is because I believe the world has lost tangibility. So I'm talking about digital platforms and losing touch, and I don't think that it's sustainable. Again, eating my bacon there, because when you go into a kitchen, there's few things like, I don't know if people can relate to. I have my mother's rolling pin that we used to make cookies and stuff with when I was a kid. It's decrepit. It's nothing special if you look at it, but it means something to me because those are the memories. And people have this, like cast iron pans. There's something in your world that was your mom, your dad's. You did it with them, and you're just not throwing it out. And I believe, to me, that making memories in the kitchen is what remains forever. And that tangibility remains forever. And so we've been able to build a product that's so superior because it's only end grain cherry. They're still all handmade. And then we're giving you the ability to pass it down generationally to your kids. And then they'll have it forever. And then they'll have it forever to send to their kids. And so we're taking that same approach, and now what we've done is we've moved into cabinetry. We found an audience for the cutting boards, thank God. Grateful, incredibly grateful that we found an audience for the cutting boards. And now we're going to take that same approach, just like my parents did.
You got some world-class barbecue competitors that are using the products. Yeah.
Really grateful for that. Like, there's a bunch of people that support us in that regard, and man, the world's good. and just incredibly grateful for that. And so you can find it at fifthandcherry.com. I'm not going away. I'll still talk to people. If you find me on Twitter or on email, you know how to get a hold of me from all the video stuff. Interesting. I'll get to. So we've talked. It's interesting. The Fed's job has gotten incredibly tougher, not easier. and let me leave you with this last piece of economic information. By the way, thank you for that with Fifth and Cherry. I didn't tell this to you either. I got I'm in a book.
Really?
Because of Fifth and Cherry. Got my copy. Yeah. So Danny was great. I'll tell you about Danny. Danny was gracious enough. And I say that because most people wouldn't do what Danny allowed me to do. I went back to school. Got your
MBA.
I got 2. And Danny allowed me to do that. I went Fridays, which meant I wasn't doing the show certain Fridays. And I think it's 4
years ago.
Yeah, it's 3-4 years ago. And so anyway, and it's where I was able to learn, like, it's not people like just start a business, put some ads on Facebook. Listen, to develop brand and to develop, there's a lot you just don't know. And I wanted to go learn what I didn't know. It's not just spreadsheets and stuff like that. So anyway, but someone heard my story and actually wrote, I'm in the first chapter of this book.
Student Startup Guide.
Yeah, Student Startup Guide. Yeah, I'm an old student. I'm going to be 47 this year. And
always learning.
Always never stop learning. And so they wrote how we conceived Fifth and Cherry. And I just got that in the mail yesterday.
Nice.
So I thought that was nice. Now, demand destruction. Fed. So this is interesting to me. So gasoline futures since the beginning of June are down 30%. Let's see, copper, an economic bellwether, down 26% over the same time frame. Gold is down 8%. Bitcoin is down 27% from the same time frame. But also, interest rates are down tremendously. And that right there. So you've got
the one thing that helped the markets.
Well, the Fed got the demand destruction they wanted, right? Some, not all.
Right.
Interest rates being lower is the exact opposite of what the Fed wants. And so why is that? So the Fed wants rates to go higher to quell demand, to cool off the economy, an intentional slowdown, so they can produce a quote-unquote soft landing. They're going to have to intensify the rate hikes. And well, why would interest rates fall? Because people are now seeking the safety of bonds. So if you look at 30-year treasuries /ZB or /CB on your Thinkorswim platform, you can see that prices going up. Like, so I mentioned things that were going down, right, in futures commodity land. And now you've got bonds in that same time frame actually going up.
Price up, interest rates down.
Yes, that means, so if you're talking out there and like, well, this will be the Fed will back off. Danny's saying the Fed will back off because they've done a horrible job and they've destroyed everything. They started a backfire in the forest so the fire didn't spread, and all they did was make more fire. And that's kind of what's happening here. Interest rates actually need to go up for the Fed's plan to work.
Yep.
That hasn't happened since the beginning of June. By the way, it's like almost 47 days now, right? The exact opposite. So the Fed meets this coming week, and they'll have a press conference Wednesday where Jay Powell will come out. I don't think you can take a 1% or 100 basis point raise off the table.
Oh, yeah, no, I don't think so either.
Yeah.
Anything's possible.
I know the Fed governors have come out and had a couple of speeches saying we're 75, 75, 75. There comes a point where the market was shocked when it was 0.25%, and then they backed off in 2018, right? And then the market was shocked at 50%, and then they're like, okay, well, 50% is good enough. Now it's 75. 75 is going to become the color tan. It's going to become boring, and they're going to need to do something to get the patient revived. And that 100 basis point thing is the medicine. Yep. So it'll be interesting how it all plays out.
Well, you also got to watch their balance sheet. That's how you really know what they're doing. Folks, thanks for listening. Tell your friends and neighbors about us. And thank you, Tim.
Oh, thank you.
We will talk to you next week on Your Money.